Okay, I'm recording this video after close of trade Monday, 16th of August 2010, and today we closed up just a point at 1077, a little bit more volume today at 1.6 million contracts traded, and we had a fairly decent range at about 14 points, kind of top to bottom. And we've had our cyclical turn on the daily time frame, but still not convinced about this market that we kind of made a bottom. Just going to show you the charts that I'm looking at right now. First of all, just looking at my long-term tick frame chart. So this is the highest time frame tick bar chart that I look at, the 40,500 tick bar chart. And this was the activity on Friday. We had an end of trend warning signal, kind of signal. We had all of these bullish divergence signals here. We've had this, we've been playing around this kind of cyclical support level here, kind of pushed down into the lows about 1070 kind of on the Sunday evening, Monday morning. And then we had a professional bar kind of print towards the end of the day. And we've come into a cyclical turn on this highest time frame, and that we're playing around this kind of support level is a little bit of a concern that a bottom's not been kind of clearly made. And then I was talking in the last video that we've not seen exhaustion selling, a kind of definitive exhaustion selling signal similar to the exhaustion buying signals that we had at the top here. This is kind of the most selling that we had back on the Tuesday's activity down here, and that wasn't for me kind of very convincing. So because we've got this cyclical turn kind of coming on this time frame, I think we're going to see a little bit of another bit of a down leg potentially. So I'm curious to see how much selling we get on the downside there, to see if we can get some extreme selling that'll be more than what we saw a couple of days ago. So that's one of the concerns that I've got. If I go up to the 4,500 tip bar chart, so this is the tip bar chart that I use for kind of trend direction on my day trading, and it's the lower time frame compared to this highest time frame here, if you like. So it's kind of divided by 3 if you like, down at the 4,500 tip bar chart. You can see the high of today was made with an end of trend warning signal. All these blue professional bars up here in a whole series, a triple layer of bearish divergence signals here, all very close to the zero line, and that was kind of the exhaustion signal that we had, and the market kind of rolled over. And so we've kind of come into the close today kind of with some professional bars at the close. But this is what for me is quite interesting on this time frame, kind of an exhaustion selling signal at this point. Not unusual for us to bounce for an exhaustion selling signal here, because that means at that point all the sellers have sold, and so there's kind of we get a natural bounce because we run out of sellers at that point. But I'm starting to wonder, is this this is happening the beginning of a downward move rather than the end of a downward move. So if you like, today's low was put in at the open, and that was after we'd had exhaustion selling at the close of Friday, and then some bullish divergence signals overnight on the Sunday evening, and then in the morning you can see all these professional blue bars coming in at the low of the day. This is my kind of flush signal here, where we get an extreme amount of selling, but it's not more than the exhaustion selling we had previously, but it is more than the kind of bullish divergence signals that we had here. And then the market bounces from there. That's actually the trade that I took based on the 1500 tip bar chart this morning, and just took a break of that high on the professional bar and just rode it up for 4 points. There was a lot more in that move, but that was good enough for me. So I'm just wondering if this is kind of an exhaustion selling signal, signaling that we're that's the start of a down move, and we've just had a little bit of a bounce from there, a fairly weak bounce in terms of price, but we kind of peaked out in terms of buying activity. I'm just wondering if we're starting to roll over again, and then on the 4,500 tip bar chart this kind of goes down. The back on the sine wave chart, saying yes, we've got our cross in terms of timing on the daily chart to put in some kind of a low here. But for me, I was saying the 45-minute chart is going to be key. I need to see a pullback and an end of trend on these time frames to coincide with that daily chart to give me some confidence that we're bottoming at this point. We've not seen that yet. So for me, I'm starting to think things are looking a little bit weak. If I go to the euro chart, again, similarly on the kind of swing trading tip bar chart here, we've had a pullback and a downtrend signal. We had our exhaustion selling at this point here. We've kind of come back, professional bar up at the highs here in this pullback, starting to roll over at this point. So just wonder if we're going to have some continued weakness in the euro tomorrow. I'm kind of going to bring down the equities with it as well. So it's a potential scenario that could play out tomorrow. One of the nice things on the Euro chart was I don't day trade the Euro chart, but I've been talking about using the futures contract to trade the Euro and the tip bar chart settings that I'd use. Using the better series of indicators, and you can see on the highest time frame chart for a day trading perspective, I recommend like the 2250 chart here, and you can see the highs and lows are really nicely marked, with a typical kind of range type day to day, just batting up and down between these cyclical highs and lows, really nicely marked by better sine wave here. And then when you go back down to the lowest time frame on the day trading tip bar charts for the E-mini, the 250 tip bar chart, you can see those highs and low signals were really nicely printed by end of trend warning signals. These highs and lows, there's an end of trend there, and that's a second cyclical turn after an end of trend, and then another end of trend here. And, when these end of trend signals on the lowest time frame coincide with cyclical turns on the highest time frame, for me those are high probability trades. Then you combine that with momentum and some professional amateur kind of bars, you start to get really high probability setups. So it's just nice to see that these signals, they work in different time frames. I prefer tip bar charts, but they work in all kinds of different time frames and different markets. That's kind of nice to see. Just talk about the bond markets, because we've got an absolute explosion happening in the bond markets. I've just pulled up the 30-year bond chart here, the highest tip frame swing trading chart that I use, the 4050 tip bar chart here, and you can see all these kind of exhaustion buying activity, broke into another up leg. We've had a whole series, a potential end of trend here, we break above it here, another potential end of trend here, we break above it, into another kind of exhaustion buying activity, and these are just extreme buying levels here. And you can see at the highs of the day, all these professional blue bars marking, professionals at the high there with that exhaustion buying. That could be a little bit of profit taking, but it's just extreme what's happening. The flight to safety at the moment into the bond market. And then when I start to look at how far has this move got to go, one of the things you can look at is you can look at the price bars themselves, but you can also look at the interest rates. One of the things that I do is I look at the interest rates on the 5-year, 10-year and 30-year based both on daily, weekly and monthly charts, and I use the better sine wave indicator just to show kind of cyclical turning points and places where we might find kind of rates coming to rest. And if I look at, first of all, this is a 30-year chart of the interest rates, you can see we kind of topped out at the beginning of the year between 4.5% and 5% up here, and we've kind of swung down. We're at about 3.7% at the moment, and it looks like we're going to continue down until we get a cyclical cross on this monthly time frame. Then if I look, this is the 10-year chart, similar pattern here. High of the interest rates, about 4% at the beginning of the year, and we've come down to 2.5%, and again we're coming into a cyclical low coming up here. And then on the 5-year chart, similar pattern, cyclical turn at the top at the beginning of the year, and we're down to 1.4%. We've had a cyclical cross in this time frame, so any kind of strength in interest rates would signal some kind of bottoming process there. But it's just a useful way of looking at where those interest rates might be turning, to look at those on those different markets, the 5, 10 and 30, on those different time frames, the daily, weekly and monthly. And you can just use the better sine wave indicator to signal those turning points, and look at all three markets kind of simultaneously, because one or other will be leading the pack, but they all tend to move kind of quite closely together. Then just talking about the bond market, I used to do quite a lot of analysis with the bond market, and I've got a feature article that I'll probably link to at the bottom of this post, which is rather old, but it talked about how you could do bond market analysis, intermarket analysis using TradeStation. And the trick on TradeStation, because TradeStation's a little bit funny about using different data streams in the same chart. If they're not from the same exchange or in the same time zone, you get all kinds of different problems. The easiest way I find to do intermarket analysis using bond market is to bring up the ETFs, so to look at the SPY versus the TLT. So the TLT is a kind of longer term, 20 to 30 year bond market ETF, and then the SPY is the S&P ETF that everybody's kind of familiar with. I've just overlaid this on this one chart, so you've got the S&P in green here, and we've got the bond market in blue. And Just to show you just some broad analysis, first of all, I've just brought up a correlation indicator here. This is kind of based on the canned correlation indicator that comes out of